This one is about money and potentially impending doom. Now, the growth of the US economy continues to surprise most analysts. Of course, there is an expected caveat, and this is what's about to come up. First, let's look at the glorious data segment. In Q1 of 2023, analysts predicted a 1.7% growth, and we the people fueled the economy to 2%. For the second quarter, the real gross domestic product increased at an annual rate of 2.4%. However, the Bureau of Economic Analysis is still working on the final numbers, but for now, it's looking good. However, let's break it down from the top. Consumer spending is the largest component of the GDP, and per Nasdaq.com, there is a tight correlation between GDP and corporate profits. In other words, we, the people, unsurprisingly, make it possible. Therefore, in a not-so-roundabout way, if the consumer is responsible for all the juicy dollar goodness and shareholder dividends, we also have to ask the question at what cost? How prices of some goods and services have increased exponentially while others may have fallen. Just pause the upcoming slides to read and then steady yourself because presumably it's about to get a whole lot worse. Starting with Yahoo Finance and also found on Fox Business and various other outlets, the American consumer is about to run out of cash at the end of this year. Fox is a little more laissez-faire about it and says Americans may have depleted their pandemic savings by the end of 2023. In the end, it all comes out to be the same. Another indicator that we're heading towards dire straits is the uptick in credit card usage. Collectively, the American credit card balance is at $986 billion, and that's only for the first quarter of 2023. Here's a handy little graph to drive the point home too, and when you look a little bit closer, you'll notice the gap between housing and non-housing debt continues to widen. So things get more expensive, wages don't keep up, the Fed continues to raise rates, savings get depleted, and credit card utilization is off the charts. It's a really bad mix, but let's add an accelerant towards doom, shall we? Yes, of course, it's student loans again. More than 40 million owe student loans. The impact by reinstating payment plans is estimated to reroute $18 billion of consumer spending per month from the market to student loan servicers. In other words, everyone will feel those impacts. And no, this video is not meant to spark another debate on student loans. We've already had that on numerous other videos. But since we're already on fire, the repayment reinstatement is going to just add fuel to that fire. So what I'm wondering is much larger in scope, and that is, where will this leave millions of Americans? Those who are already having a hard time making ends meet, paying rent, buying groceries, and paying for bare necessities. When millions cannot pay their bills, we will see likely an increase in interest rates across various domains, from mortgage to cars to credit cards, if a borrower remains finance-worthy to begin with. Or worse yet, will we see an increase in homelessness? Or will medical conditions go untreated because a contribution to the for-profit healthcare system is not within the financial means of the sick? Now, certainly I'm not a fortune teller, yet when we consider the trends and the data, as well as the opinions of those who really understand economics, then I truly wonder who's going to be the last person that carelessly whispers, "Let them eat cake."